This one candle strategy allows me to be at the charts to trade one daily candle, make my money, and then walk away. Your problem is you don't have a framework or a plan. So today I'll give you my very best one candle framework to be able to predict what the very next daily candle will do. Let's get straight into it. Getting started here on the British pound versus Japanese yen daily chart. The formation and the framework of this strategy is basically this candle right here. But we are not trading this candle. This candle tips its hand to us. This candle tells us what to do. And then subsequently, we trade the next candle, right? So really, we're focused on one candle and then we're trading the very next candle. So what about this candle tells us that this next candle is tradable to go lower? Well, if you take a look, the general idea of this pattern is we are in bearish order flow. That's the first step, or bullish. In this case, obviously bearish. We must be in bearish order flow. We must take the previous candle's high and we must close below the low of the previous candle. So this formation, right? Because we take a high here, trade it through, and then back down and closes below this low. That's the key part. We have to close below this candle's low. Okay, once we do, the next candle is set up for a Judas swing first and expansion lower. Trade into a higher time frame PD array over here. This low is a nice target. So this one simple one candle framework tells us what the very next candle will do. If you partner this with more framework, what would be the extra context here? The extra context to make this even more high probability is the fact that one, we're trading inside a fair value gap. All of you are familiar with what a fair value gap is by now, okay? We're also running above a swing high. Remember a few weeks ago, those who watch all my videos when I taught triple premium and triple discount. This is a similar thing. However, this time we're using one candle to confirm the very next one. But we also trade above this swing high. So buy side liquidity is taken above here, and we take the previous candle high, and now we wait for closure. So you're letting this day play out. As soon as we run above this, you're thinking, okay, we may potentially have the framework for the next candle to expand if we close below this candle's low. Look what happens. Trade down, close here, the very next candle opens up, and I'm teaching you to trade this candle. Let's dive into the lower time frame and check exactly what this candle does. If we drop to the hourly chart, which is a really nice chart to pair with the daily chart, you can see this is the previous candle low, this is the previous candle high. Ranges breed expansion. So when we run above the previous candle high and close down here, you can see the new day opens up, midnight New York time, right? As soon as this happens, if I make this a bit less in your face, as soon as this happens and we open up, we anticipate a Judas swing higher. Where do we swing into? The fair value gap. So we're looking to trade this next candle. We trade into the fair value gap and break lower. What do I look for to confirm my trades? I've said this across multiple videos now. Some of you are probably screaming it right now. A change in the state of delivery. I'm looking for a change in the state of delivery to confirm my bias. So to make this even more high probability, once we close below this candle's low, we want to trade into a key level, which is the hourly fair value gap, then get a change in the state of delivery. Up close candle before the move up, gets closed below. The key is the body, okay? The body is where the bulk of the volume lies. So when we close below this candle's body, we now have a change in the state of delivery. That right there is your short position. Once we trade back up into the candle's high, stop loss goes above the high. You could even stretch it to the top of the gap. And then you would aim for a simple 1 to 2.5, or you could hold for a higher time frame key discount array. But that is the framework. So all we are looking at, okay, all we are looking at is for this candle's high to get taken and close below the low, right? And then look how much expansion we have over the next few days. Okay, over 1,500 pips over the next few days after this one candle formation plays out. Do you see how simple this is? Using this one candle to be able to confirm your bias. All right, It is this simple. What happens up here? Okay, we trade into a really rich premium, obviously. The exact same thing is happening up here. We trade into a really rich premium. We take out the candle's high. Now what are we waiting for? Where do we want to close below? This candle's low. Okay, so Wednesday's low gets closed below. We've just outlined the whole framework for us to now move lower. Look what happens when we get this formation. Okay, once we get the formation, so from here down to here, when we get it again, look how many pips that is, over 1,000 again. The next time we get the formation, the very next time we get that same formation, look how far down we move. Do you see how powerful this is? Because we're inducing buyers, inducing sellers, and taking out buyers here. Then we're trading back up, giving a Judas swing, and then we break lower. Okay, all of this framework down here, all of the rebalances of fair value gaps, all of these, all of the immediate rebalances, all of the order blocks here, trade down, up, back into the order block, breaks lower. All of this is set up by this one framework. So you can use these type of candles to your advantage. Once we take both sides of the market out here, this signifies either a change in trend or a continuation in trend. Okay, that's the key here. Either a change in trend or the continuation of trend. If we get a scenario like this down here where we take out buy side 2 into a fair value gap and have the candle formation, that's high probability. I like trading that. Okay, let's dive into a few more examples and I'll show you exactly how we can utilize this even more. Now I want to give a buy-in example. Okay, look at this. This is a weekly chart on euro dollar. This happens on the weekly, on the monthly, or the daily. This is a higher time frame confirmation of if we are to continue trend. I want you to take a look at recent price action in July, end of July, start of August. Okay, fair value gap after an OTE. So we trade a low to high, come back to about 70%, rally from there. We then drop down into a discount fair value gap. Okay, look at what this candle does, the one that drops down into the discount fair value gap, to give institutions extra opportunity to buy. Look what happens. What formation do we get here? Well, we get a rally below the low and a close where? Above the high. It's the same very concept. Okay, you may notice something as well. As I'm going through these examples, you may notice something. Once we take the low, take the high and close above it, is this high not used as support? Look, we rally down not so much further than this high. We rally into the body and then rally higher. Why? Why the body? Well, I told you all earlier in the video, this is where the bulk of the volume lies. And if we have a down close candle before we move up and we close above that down close candle, does that down close candle not become an order block? Okay, so when price Judas swings, like I told you all, the very next candle should Judas swing lower into this candle. Are we not set up for expansion higher? And look what happens. Indecisive candle here, granted, but we took out buy side liquidity regardless above this high. And then look, the momentum of 2 candles, 290 pips. Big weekly candles, okay? Those are really nice intraday moves you can catch inside of these. And also, is this not a market maker buy model? Smart money reversal, low risk buy, accumulation, reaccumulation. Do you see how everything I teach ties into the very next thing? Okay, everything I'm teaching you is in a specific order for you to get. Okay, it's in this order so you can piece it all together. Those of you who want to be my students will piece this all together and want to make it in this game. Okay, this is simple framework. It's simple once you understand what I've taught you, and everything ties into one another. Nothing is random. But again, simple framework. If we remove all of the extra stuff, ignoring the market maker buy model, ignoring the rebalance of an imbalance, ignoring this becoming an order block, it falls onto this one candle formation. You take out a low with bullish order flow. Remember, that's key. We have to be trading up. Take out a low, take out a high and close above the high. So we have a bullish candle that closes above this candle's high. The next few candles expand higher. you would drop into the 4-hour chart to catch this expansion higher. How do we do this? Well, obviously we have our previous candle low, trades back, trades above, closes above. What do you wait for now? You wait for a low to get taken. This is a key low. Why? Because it ran into the previous candle high after breaking above it, ran into it and expanded. So when we come down and take out this sell side liquidity below this low, okay, we take out that, we have now induced sellers. Retail look at this big candle that breaks a low. They look at this as a selling opportunity. Retail ICT, which is what I call ICT students who don't study properly, who don't put in the work and don't listen. Retail ICT see this as a fair value gap. They are shorting inside here. Why? Because we break down, make a fair value gap formation, which is just a pattern. People pattern trade often. That's the mistake you make. Narrative is everything. What is the narrative? Broke below a low, closed above a high. Okay, so we have a continuation candle formation. The one candle is showing you everything. The one candle is telling you what the very next ones will do. Okay, so we're not shorting this, are we? Because the narrative is we've taken this candle formation traded below sell side liquidity pool into a fair value gap, and this is a fake fair value gap to be used when on the other side for new accumulation of longs. Look at this here. We trade through the fair value gap, closing above it, and trade back into the bottom of it. When we have a bearish fair value gap and it's traded through because we're bullish, we want to see the bottom of it, so the start of the fair value gap, traded back down into, and this will become support. Okay, the top is fine, but if we trade into the bottom of it, it becomes a really key level. The algorithm refers to this level. Look how we react to that level. If you don't believe me, look how we react to the bottom of this fair value gap. Okay, trades above it, closes above the top of it, trades back down into it, taps it and runs. How much does it run? 100 pips from that one tap, even more to be honest. Yeah, 133 pips from that one tap of a fair value gap. If you miss this, how do we position ourselves again? Well, we have a new dealing range. Low to high. Took out sell side liquidity, ran higher, took out buy side liquidity. Trades down into 50%. Below 50%, you have a fair value gap. Trades higher. Really simple, right? Simple enough. This drop down is to scare retail. Notice how when we drop down with force, it always creates a fair value gap. That's because people are shorting this and it's traded through and used on the other side for new buying, for actual smart money buying. So be careful when you're trading these concepts. Make sure you're not trading the wrong things. Is this formation, is this one candle pattern not enough? Okay, this is why I'm teaching you one candle theory, because one candle truly is enough. If you have the context and framework, the problem is a lot of people can't wait for that one candle. A lot of people struggle to actually wait for the candle to do its thing. But if you waited, if you actually had the patience to wait, after this candle forms, you have so much expansion. Okay, so much expansion to catch on a lower time frame, if you please. You could literally pass challenges with these candles easily and get payouts. Okay, this is over a matter of weeks. This one weekly candle that had the framework I've outlined at the start of the video will feed you for weeks. So with that being said, that will bring us to the end of the video. If you do enjoy my content and want to be mentored by me, check out the top link in my description, as that is where you can purchase mentorship from me and finally become my student. Learn with all the guys in my group who are improving daily. Recently, we have had many students pass challenges and get funded. So we're improving every day, and I give daily, weekly outlooks, all of that. Dive into these concepts even deeper in there. With that being said, if you did enjoy the video, please do drop a like to support my content in that way. Subscribe if you're new, turn on post notifications as usual. And with all that being said, thank you as always for watching, and I'll catch you guys in the next video.